What's going on, everyone? It is Paul, the 920 Trader with 920 Trading and Trading Decoded. Today is Tuesday, February 6, 2024, and this is how we traded SPY today. But before we actually get into the charts, if you enjoy our content, please consider giving us a like and a subscribe. Don't forget to turn on those notifications so you can be notified when the newest content is available. Also, please consider, sharing this with your friends and leaving us a comment. We would greatly appreciate that. So, without further ado, let's get into the chart for the day. So, we do the same thing every single day, folks. We are looking for the pre-market high. Now, the pre-market high, we didn't get there until pretty late into the pre-market session. So that's sitting up there at about 493.66. We got the pre-market low sitting down here at 492.03. So, right out the gate, I'm thinking, okay, you know what? We got $1.50, $1.50, a little over $1.50 worth of potential movement at least from a pre-market standpoint. So you're thinking, you know what? It could be a good day. We don't want to have any bias. We don't want to have any bias to the upside or the downside. But again, these are our levels. Now, we've also got that. So we got that pre-market high. We've also got a pre-market 5-minute double bottom. So that's what that line says right there. 5-minute pre-market double bottom. Now this line right here, this is going to play out later, but this was an intraday quadruple bottom on the 5-minute. So intraday quadruple bottom on the 5-minute. Intraday 5-minute resistance. Okay, so we've got some resistance at this level. 30-minute. This came from yesterday. So we got a 30-minute support and demand zone from yesterday at this level, 492.55. And again, an intraday 5-minute down here at 492. And there we go, back to the downside on the pre-market low. So let's get back into the charts. Actually, let's get into the charts. I really talked about it, but here we go. Okay, so if you remember yesterday, we had a setup yesterday that I was looking at. You know what? We had that death cross first thing in the morning, and I said, you know what? That was too big of a candle for me to take because I don't like to take that 70-cent candle yesterday. But if I get that opportunity today, particularly if we can breach and get a close through this double bottom on the 5-minute, I'm going to go ahead and take that. And I did. It wasn't a FOMO play. There was no FOMO whatsoever in the play. But what it was, we breached this level right here. I waited, I jumped the play a little bit. Waited to get below this level. Again, pre-market 5-minute double bottom. So when we breached that, I thought, you know what? Let's see if we can go take out some levels below. It did not happen. Hit my predetermined level of risk, which was a breach of this level up in here. So had about 20 cents, 25 cents. It's not a bad loss. It wasn't too bad. But again, I closed out the trade when we failed to make a lower low. Got that cross to the upside. Obviously, I don't want to jump in and out of trades. Okay, so consequently, I did not take this play to the upside. I waited. We topped out here, tried to get, we took out obviously pre-market high, got through this 30-minute supply zone again from yesterday. And I'm thinking, you know what? Let's see if we can take this thing back to the downside. But I don't want to get into this thing too quickly. I want to know exactly where my risk is. I didn't want to take this, could have taken this. Nice fishtail play right here. But again, didn't want to jump it too quickly, given the fact that we were still, we had that pre-market run up. So I did take this cross. So it was actually a good cross back to the downside right here at 9.55. So we got the cross to the downside. We had multiple things going on. We had a 920 crossover to the downside. We were through the 20 to the downside, and we were through VWAP. All of those things lined up very, very nicely for a play back to the downside. Now, as 920 traders, what we are doing is we are using this 9 right here. This is our resistance back to the downside. Now, when we're going to the upside, it is our support. So we're shooting for targets along the way, folks. We are shooting for targets along the way. Now, this intraday was not there yet. So this target was not even there. So I had this target right down here, this 30-minute supply or support and demand zone from yesterday. So this was my target. As soon as we got this candle right here, we breached this back to the downside. I said, you know what? It's been a really, really nice play so far. Let's take the trade off the table. I think that was, a dollar play, something like that. So 53 down to 58, just about a dollar, somewhere right around in there. A dollar play, when you can pick up a dollar play, either way, upside to downside, that is a very, very nice play. So I took that. Again, good play. Didn't take anything to the upside. I was looking for the downside. Now, we get into situations every now and again, and we call it slop. You can call it slop. You can call it consolidation. You can call it a bunch of really, really nasty names. The bottom line is, for the next couple hours, it was horrible. People got chewed up left and right. One of our members counted 12 crosses. Can you imagine taking 12 crosses in the first couple hours of trading? Holy cow. And something said, you know what? It just doesn't look good. And again, a lot of people got chewed up and spit out. We just kind of, went between these zones for, it felt like forever. Maybe it was an hour and a half, somewhere right around in there. Now, once we were able to breach out of these zones, to the upside, we took a little upside. Didn't play any of these because, again, I didn't trust anything. I didn't trust that. You got one candle that runs down, the next candle runs up, run down, run up. So at that point, you're thinking, how can I actually trust this be either to the upside or the downside? So you might see crosses, but at the same time, it's like, is there anything there? Now, it's okay. If you don't like the chart, folks, do not trade the chart. It is always better to not be in a trade and wish you were than to be in one and wish you weren't. Again, people got chopped up in here all morning long. But anyway, here's all your crosses. Again, one of our guys counted 12 crosses in the first couple hours. That's a very, very, very bad way to go about it, to trade. Yeah, it's not good from a mental standpoint. Okay, so cross, breach the VWAP to the upside, hit this level intraday, quadruple bottom on the 5. Anyway, made low. We had this target in mind all day, 492.03. Again, we took out pre-market high early, first couple of minutes of the day, took out that pre-market high. So at that point, we're always looking for that pre-market low, 492.03. Now, if you get such a bias to the point that it has to go get that pre-market low, it doesn't. Don't allow yourself to get biased. As options traders, we don't care if the market goes up. We don't care if the market goes down. We just want movement. We're fine. We'll play it to the upside. We'll play it to the downside. If you have a bias, so let's say your bias all day long is it's got to go down because of certain economic conditions, but then it goes up. You're fighting yourself. You're fighting the market. Don't fight the market. Let the market do what the market does. So consequently, no trades in here for me. And I remember telling the folks, hey guys, if you don't like this chart, please do not play the chart. Don't take any trades, take some time off, maybe come back, power hour, see what's going on the last hour of the day, maybe the last couple hours of the day. Maybe there's a shakeout. Maybe you can play something. So again, bounce. We finally made a little move back to the upside. Now, again, remember, we had the intraday quad bottom on the 5 right there at 493.77, 493.77. We also had this area right in here. We're moving up. Again, nice play. Now, again, as 920 traders, what we're doing was we're using this 9 on the way to the targets. So we want to use that as support on the way to our targets. If we fail to get to our target, or if we barely get to the target, if we're struggling at the target, take the trade off the table. You can always get confirmed back into the play. So at any rate, we got through this level right here, came up and we touched this multiple times. I'm sure there's plenty of people that are thinking, okay, we got to close above that. Let's go ahead and play this to the upside. Well, hold on here a second. You can look at your higher time frames and realize there's just not a whole lot of movement up there. So I'm looking at this level again. So this 493.47 and 493.33. And I specifically remember saying this in the voice chat. I said, folks, we got a double cross to the downside. You have literally 13 or 14 cents worth of risk. At this point, our risk was up here at this 493.47. That's no risk, folks. What's the reward? So we got targets down below. So the first target that we're shooting for is VWAP. We breach VWAP. We get the close that we're looking for below this level. Remember, we're shooting targets. If we had a hard time getting to this level, we probably want to take the trade off the table at that point. So we got that target very, very easily. Bounced around here for a couple minutes, tested VWAP again, but we were able to maintain that level. Next candle, look what happened. Just a whammo to the downside. Absolutely. I think this is another dollar play, somewhere right around in there. Yeah, there's another dollar play. I took the trade off the table right in here. You know why? Because this level down here, we had a quadruple bottom. Had a quadruple bottom over here, folks. You don't want to fight through all that support. You realize if you've got a quadruple bottom or a quadruple top, you have excellent support or excellent resistance. So at least consider taking your trade off the table when you get to that level. Now, we're still thinking, and again, I took the trade off the table right in here for, 6-7 minute trade. Very, very nice trade to the downside. Some folks waited to get out of this trade, and that is perfectly okay. We hadn't breached the 9 back to the upside. Our safety is in our 9. They're thinking, you know what? If we can breach that 490.02, we got a lot of room to the downside. What do we got down there? 15-minute demand zone from yesterday sitting down there. We didn't even sniff this. We got close. What do we get? 6 or 7 or 8 cents away. Not close enough. Definitely not close enough. So trade back to the downside. Nice cross up to the upside. Now, here's the thing. When you make a low, generally speaking, when you make a low, you don't want to take that first cross to the upside, okay? You want to allow for a pullback, and in this case, it pulled back to a very, very known level again, 492.34. Remember back from our quad bottom on the 5-minute at that level. We tested that level, and it ran back up. It was a beautiful play to the upside right in here. Now, at this point, we're getting late in the day, folks. We're getting into the power hour. I'd done very well throughout the day, so I said, you know what? I'm done for the day. There might be a play on the table, but that's okay. Now, the later into the trading day you go, the more difficult it is to trade for a couple of reasons. Number one, because you have more areas of support and resistance. Think about all those trades that go on during the day. They're establishing areas of support and resistance more than when we started the day. So that makes it more difficult. It's also more difficult because you are fighting theta. Theta, again, is the time decay of money. So the closer you get to expiration at this point, when you're in power hour, the last trading day hour of the day, the faster that theta moves against you. So you can have SPY or SPX moving in your favor, but any little pullback will absolutely destroy your position. So quick scalps late in the day, Now, 350 candle. Let's talk about that 350 candle. Now, we had that cross to the downside again, didn't play it. We had a really, really nice play back to the upside. At this point, we have 18 minutes left in the day when we did get this cross. So a nice fishtail play above this level for 82.89. And then a nice kind of that golden cross to the upside. We crossed the 9, we crossed the 20, and we crossed the VWAP on the same candle. So at that point, you're thinking, you know what, you can take this play. And you could, but remember, you are so late in the day at this point. You've literally got 14 minutes left in the day, and you have the 350 candle. So let's say you're in this play, it pulls back a little bit, you lose all of your gains. At that point, your gains are absolutely gone. Particularly if you get to that 350 candle and it turns around on you, and then you are absolutely hosed. So that 350 candle, a nice green candle. And look what happened the last couple minutes of the day. It just shot through this area. Look at the volume. Lots of volume that took it up into close. So, and again, look at that close. Look at that close up here, folks. We touched that level, that 494.05, 30-minute supply zone. And resistance from yesterday. Touched that zone, came back, pulled back a little bit. So that was the day. We had really, really nice moves early in the day, and we had really, really nice moves late in the day. But the middle of the day, it just wasn't really good. And again, if you get caught in those areas of consolidation or slop or whatever you want to call it, those can really hurt, both from a financial standpoint and from a mental standpoint. The problem that happens when you get caught up in this slop is you're like, okay, the last time I did this, I took a losing trade. The last time I took this, I took a losing trade. So then you get that setup and you say, okay, this is a good setup, but I'm not going to take this because I remember the last 3 times or the last 2 times that I took this trade and it didn't work out, so I'm not going to take it. What happens? 9 times out of 10, it goes in your favor and it's a really good trade. And then you kick yourself in the tail and you go, why did I not put on that trade? Well, you didn't put on that trade because you got bloodied up based on these last several trades that didn't work out. That's human nature, folks. If you get caught in a situation like this, just chalk it up to, hey, that's one of those days that happens in the market. Call it a day. Just be done for the day. And you're going to look at the chart at the end of the day and you go, oh, I would have played that or I would have played that. You might have played that. You might not have played that. You just don't know. But if you're taking a beating, particularly early or midday, call it a day, live to fight another day, protect your capital, come back with a fresh mindset the following day. So that is how we traded SPY today. I hope everybody had a great day. I appreciate everybody, every one of you, spending a little bit of your time with us this afternoon. Now, if you enjoy our content, please give us a like and a subscribe. Don't forget to turn on your notifications so you can get notified when we drop new content. Also appreciate a comment. That would be great. And send it on to some friends. But at any rate, I hope everyone has a great rest of the evening. I hope everybody does well tomorrow, and we will see you in the markets.